Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because the global liquidity index just made a new high, and that's great news for our current Bitcoin uptrend. For the past few weeks, we've been wondering if this was the start of a new downtrend for the global liquidity index like the ones we have seen previously, or if it was just some consolidation before new highs like we've seen a few times already this cycle. And it looks like we finally got the answer to that question, which means Bitcoin could have more room to run here. And this new high for the global liquidity index is mainly driven by the drop we've seen in the US dollar this week. Now, it's hard to know if this is going to be a higher low before one last bounce higher before it rolls over, or if it's going to break down here. But regardless, judging by the fact that we're seeing a macro breakout on the global liquidity index, and what those two breakouts did previously, it does likely mean we're going to see rising global liquidity over the next few months and a dropping US dollar. And as always, I try my best to cover everything in these videos, but if you'd like to learn in a more structured way, you can check out the Crypto Enjoyers program in the video description. But because we're seeing falling inflation combined with standard GDP growth and a weakening labor market, it's no surprise that we're seeing the market continue to price in more rate cuts, and we continue to see the Fed's quantitative tightening slow down month over month. And this is, of course, starting to be reflected in risk assets, which, of course, are forward looking and know that rate cuts are coming sometime soon. It isn't surprising that we're finally seeing some consolidation for the S&P 500 here after the incredible 22% rally we've seen since the April low. And if anything, it's likely we fill this gap that we left on that rally, which we talked about last week. And then perhaps once that gap is filled and we put in a higher low, the S&P 500 can continue its move to new highs. And that's the exact backdrop Bitcoin needs to continue its rally higher. And because of that consolidation in the S&P 500, Bitcoin is struggling to close above 109,000 as of right now. Honestly, it wouldn't surprise me if Bitcoin consolidated a bit here before its next move higher. That would result in everybody comparing this to 2021 and calling for a double top left and right, because that recency bias of what happened last cycle is so strong. And I think that could give us the exact fuel we need to really put in the final big finale going into the rest of the year if we do end up seeing that consolidation. But if we just break through on one go, then I think that's our finale big move into our top, because we would have so much momentum and have gone so long without any pullbacks at that point that I think long-term holders will step in to sell quite aggressively. And this is why Monday's free weekly report was called so close, because that 109K level is the last level between Bitcoin and price discovery. But that doesn't mean that some shenanigans can't happen there to liquidate some long positions and bring a little bit of fear back into this market after the free ride we have experienced over the past month and a half or so. And we do have plenty of bullish narratives and catalysts to keep investors excited and send Bitcoin higher. This week, we had the Texas House pass the strategic Bitcoin reserve bill. That means all that's left now is for the governor to sign it. And based on his comments, it seems like that bill is going to pass quite soon. We also are continuing to see huge ETF inflows into these Bitcoin spot ETFs. They're about to have their best month ever, with $1.5 billion in just 2 days. And you can see that this trend has been going on for quite a while now. It's been over a month that we've been seeing these incredible inflows, and we're still seeing the corporate treasury narrative of these random companies all over the world deciding to buy Bitcoin to pump their stock. And for now, their stocks are pumping as Bitcoin continues to go up. We're seeing this Swedish health firm buy Bitcoin. We saw Semler Scientific, a medical devices company, I believe, boost their Bitcoin holdings as well. And with all of these bullish narratives and catalysts, it isn't surprising that Bitcoin has seen this incredible rally we've experienced over the past few weeks. And I remain optimistic that we have higher to go as long as we hold above 100K, even if we come down and briefly wick below it to shake out a lot of leverage and FOMO buyers. Market sentiment is still comfortably in the greed region, and we have a lot of investors now talking about an acceleration phase now that Bitcoin has broken out and that we're going to see price discovery quite soon. But of course, with that comes all of the crazy price targets that start popping up out of nowhere, like $320,000 Bitcoin over the next few months. And this is very common. There's a lot of people out there that share more reasonable price targets, like Bitcoin rallying to 140,000, because diminishing returns are a very powerful thing. But then you also see charts like this one all the time where they just draw a line straight up to 300K and say that Bitcoin is headed to those prices by June of this year. We do have to keep in mind how big Bitcoin's market cap is now at 2.2 trillion and taking its place as the 5th largest asset in the world. And even though I think it's destined to make its way to second place behind gold in the near future and get above Apple, Nvidia, and Microsoft, it's a lot harder for me to see 300K or 400K or 500K Bitcoin this year because of the insane market caps that would require. But just because I don't believe we're going to 300K doesn't mean I don't believe Bitcoin still has higher to go. Impressively enough, we still haven't seen that much retail demand and excitement come back to this market, and nothing like we saw in the December local top or the March local top. So as of right now, it looks like we could still have higher to go in this uptrend. And even if there are some brief pullbacks to liquidate some leverage along the way, because we do have Bitcoin open interest sitting at all-time highs, it wouldn't surprise me if we saw more brief leverage flushes like we saw with the Trump EU tariff headline, which made Bitcoin drop 4% almost instantly and liquidated $300 million in leverage positions. This is very common after Bitcoin has put in that impressive of a rally, and so many investors are chasing it via leverage. These leverage flushes can happen very often and very quickly, catching most of those investors off guard. So where does that leave us in terms of cycle scenarios? My base case is still the same, especially if we just continue to rally higher with this FOMO-driven rally without any pullbacks. If we enter a consolidation period that cools off price, we can talk about this cycle going on longer. But as of right now, the early cycle is still my base case, unless we see some consolidation over the next few weeks, because Bitcoin is starting to look exhausted when looking at things like the RSI, which is a measure of momentum and the strength of the rally. Notice how in the previous cycle, we had much higher RSI levels going into the first top and then a lower RSI level going into the second top, even though price went higher. This is called a bearish divergence and is usually a warning sign that the top is near. And this cycle, we had the highest RSI reading at the March top, a lower high at the December top, even though price went higher, and it looks like we're gearing up for a third lower high again, and that would correlate nicely with Bitcoin making a new price high, but not having the momentum to go crazy high like those 300K price targets, and that aligns very nicely with the early cycle scenario. But as always, we'll continue to monitor the data to see if that's what actually happens, or if the data is going to point to something else over the next few weeks. For me, I'm just being patient here and sitting at my hands now that Bitcoin is more than double its 200-week moving average, which it tends to mean revert to during bear markets. So I don't think there's incredible value by buying very aggressively here. If anything, I would rather take small profits along the way, but keep the majority of my holdings exposed to the market to take advantage of more upside. And this is just what I do as part of my portfolio automation system, which I just use to automate my profit taking and accumulation, because it can be very hard to make good decisions if you're relying only on what the narratives are telling you, what influencers are telling you, or what your emotions are telling you when everybody is incredibly greedy or incredibly fearful. And the future of this technology and asset class still look brighter than ever. It looks like we are going to be getting the stablecoin bill, which is going to be huge for institutional adoption of stablecoins. Stablecoin supply continues to go up month after month, and we're seeing growing popularity of yield-bearing stablecoins. Now, this is not the sketchy yield-bearing we've seen in the past, where those stablecoins were being lent out to hedge funds to be able to pay those huge yields. These stablecoins are just paying the yields from the US treasuries that are being held by the stablecoin issuer. So for example, USDC right now pays 0% on their stablecoins, and they're keeping all of the profits of the US treasuries they're holding. But I wouldn't be surprised if competition made it so that stablecoin issuers were forced to pass on some of that US government debt yield to the stablecoin holders. So imagine all of the people globally that want dollars and haven't had access to them that could now hold stablecoins in something like a digital wallet, but it wouldn't just be dollar exposure. They'd also get yield on those dollars from the treasuries that the stablecoin issuer is buying. And we're seeing a lot of banks starting to panic over these yield-bearing stablecoins because right now you hold your money with them and they pay you almost nothing except for some smaller banks that pass on those treasury yields, and maybe they lend out your money to other people and keep those profits to themselves. But if people could hold their own stablecoins, that would be a huge competition to the bank's business models. And that's why the big US banks are already talking about launching their own stablecoin to try and compete with this new technology that's likely going to take a lot of market share from them. And this is why I remain bullish on assets like Ethereum, which continues to have good price structure and continues to consolidate sideways at resistance here. Bitcoin would drag it down on a correction, but I do believe it has higher to go. Right now, we're seeing an increase once again in usage and transaction fees. We're seeing more transactions on Ethereum finally once again. We're also seeing the fees on those transactions begin to go up as demand increases. We're seeing a growth in total value locked again. And I know that right now it's very popular to dunk on Ethereum because of its recent poor performance, but it's important to remember that 54% of TVL in this market is held on Ethereum, with Solana being at only 8%, Bitcoin 5%, Tron 5%, and it gets lower and lower as you go down across these chains. So it is still the dominant chain as of right now. Could that change one day? Of course. And that's why I hedge my bet with the second most popular chain by holding my Solana position. But Ethereum is still the market leader when it comes to TVL. And if you feel bad about some trades you made recently, like buying high and selling low, this Ethereum whale sold 2,500 Ethereum for $4 million during all of the tariff drama in April, and just bought back that Ethereum and only got 1,400 Ethereum for that same $4 million just 1 month later, costing them about $2.7 million by selling low and being forced to buy back in higher once the market reversed. So for now, we'll see what happens with Ethereum still trying to get above that 20-week moving average on the Ethereum Bitcoin pair for the first time since July of 2024, so almost a year ago. Solana is still looking quite decent as well, still above the range mid, still above the major moving averages. And we got news this week that Kraken is offering tokenized US stocks to non-US clients on Solana. They of course chose the Solana blockchain because of the speed and low fees. It would be very hard to do something like this on Ethereum. And I believe tokenization will be a huge trend benefiting assets like Solana and Ethereum over the next few months to years. So it's no surprise that people are now targeting higher prices on Solana, looking at things like the $260 level. I'm targeting the range high at 200 as of right now, based on current structure. And once that level gets reclaimed, we can talk about higher prices. But as of right now, it still looks good on its Bitcoin pair and looks like it wants to go higher in the short term and try to make up for some of the missed time and underperformance it's had compared to Bitcoin over the past year. So we'll see what happens, but as we look forward, the federal government is still running huge deficits and is still 23% ahead of where it was at this same time last year, even with all of the spending cut discussions, even with all of the work being done by Doge. The federal deficit is still growing and the trend continues to worsen. And exponential debt growth means exponential money supply growth and currency debasement, which is why I remain bullish on the most popular risk assets that many investors use as a store of value, like the S&P 500, and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.